And it's my job now to introduce the next of our speakers, which will be a virtual presentation, Andrew van der Zwan. I'm not sure how Dutch he still is, and perhaps I've butchered the Dutch surname of Andrew van der Zwan. So Andrew, you've got 10 minutes to share with us the story of MRG Metals. So please proceed.
Let me just share the screen with you. Hopefully you're seeing a display on screen. I'm Chairman and Non-Executive Director of MRG Metals. We're a small junior exploration company operating in Mozambique, but our prime objective is heavy mineral sands. So I know I don't have a lot of time, so I'll try and go through this quickly, but heavy mineral sands, what are they? The deposits found predominantly with titanium minerals and zircon, and that's what we're really focused on in Mozambique. The titanium minerals part is what we're looking for. We have a little bit of zircon, but predominantly we are a titanium player. Titanium minerals are processed as Ti2 feedstocks, concentrates, and they're predominantly found, what we're looking for is an ilmenite-based resource. We do have some zircon, but we're really focused on ilmenite. What are the uses of titanium oxide? Just quickly, they're used in paints, welding electrodes, but the metals are particularly interesting. If you take the titanium oxides, you end up with alloys that are used in aircraft applications and strong alloy metals. And as I keep saying, we are a titanium oxide focused explorer, and that's our main target in Mozambique. Right. Next, so what is interesting about the market at the moment? Bernard mentioned about some of the focus of explorers at the moment. One thing, ilmenite pricing is moving in the right direction. And when we started this project a couple of years ago, ilmenite was approximately $200. It's now in excess of $400. And rutile is now in excess of $1,200. Zircon has always been the highest valuable heavy mineral in heavy mineral sands, but our focus is ilmenite. And the good thing to note is that ilmenite pricing is moving in our direction, and we feel comfortable that for the next few years that will continue. Who is MRG? We're a small ASX-listed exploration company. We've got an exploration resource in the bag. We've achieved that over the last 2 years through our exploration program in Mozambique. We have 6 high-calibre, 100% owned projects. We've got 1 further project under application in Mozambique, also looking for heavy mineral sands. We're predominantly in the area down here where my cursor is, in an area called Corridor Sands. It was previously owned in a prior life by Western Mining, who was taken over by BHP. The project was too small for BHP, so luckily for us, it became available a few years ago. We've successfully, to date, discovered over 300 million tonnes at 6% resource, and I'll explain what that means for you in the further slides. But we've effectively been able to achieve that in a very short time frame. We really are targeting early mine life feedstock, so we've continually focused on improving our base resource, not so much in size, but in grade, and we've got over 300 million tonnes now at 6%, which is really good. So we've got an ongoing exploration program continuing, but we're moving to a development phase, and we're currently in a scoping study to look at the economic viability of that resource. We have a dual speed program as well, given that we've got people in Mozambique and we've got a good exploration team. We're not only looking to develop the project scoping feasibility, which you'd all understand is a relatively non-hands-on process. We're continuing to use our field people to continue to explore, try and high-grade the resource, but we've also just recently acquired some additional licenses in Mozambique in the rare earth space, but I won't have time to talk about those today. We'll look to complete the scoping study in July, probably mid-July to August this year. So if you were to invest in us, we're moving from potentially an exploration play to a development play. Just in terms of scale, other ilmenite players in the market today, the biggest one in Mozambique is Kenmare, and they've got not only a massive resource, but a very high grade resource in terms of content of ilmenite. But what we're trying to do, the red dot in the middle here, we started originally with a very, very large resource, over 1.5 billion tonnes, which just in layman's terms would probably represent over 100 years of mine life. And we've looked to high grade that to a higher base grade resource, but obviously lower tonnage, and that's what we've achieved to date. And what is the significance of that? I've tried to show that in the next chart, which is really about what is the value within the ground of these resources. Now, some people understand heavy mineral sands a lot, but there's two components to heavy mineral sands. You've got your base grade, the T8, which is called the THM, and then you've got your assemblage or your components of the sands. And what we have at Mozambique in the Corridor project to date is we have a very high base grade project on relative scale. It's very high, but we have a lower grade ilmenite componentry. And what we're trying to get the market to understand is that when you combine the two, you actually dramatically increase the value of the resource. And what this chart is trying to show people is that the components of the valuable heavy mineral assemblage are significant, but base grade is also significant. So for layman's terms, we're looking at every 1% improvement in base grade is worth $1.25 a tonne. And if we're looking at processing 20 million tonnes a year, you can understand that adds a lot of money straight to the bottom line. And in addition, as we move up, as we continue the work on high grading the resource, we're comfortable that we're looking at improving the assemblage of the resource as well. And every 10% improvement in base grade in there adds another $1.25 as well. So we've got a very, very large resource on our hands. We've continued to high grade it, and we will continue to high grade it all the way through the development phase. One of the other benefits of the resource that we have is that we've got high grade resource near surface, and the scoping study work we've done to date, it looks like we will have zero strip. We'll process all the sand, and this diagram is just basically to try and show people we've pretty much got high grade mineral sands from surface. That's significant because this is really an earth moving exercise, and we'll be able to move a lot of dirt straight from ground into processing. So that's great for us in terms of a cost structure. Just quickly, as I said, we're high grading the resource. I won't go through these numbers, but we have got a massive JORC resource of 1.5 billion tonnes. That's not significant. That's not that relevant for us. We're trying to continue high grade, and we've now split it into three, probably multiple pit zones of 100 plus tonnes to give us that 300 million tonnes at in excess of 6%. I'm comfortable that we will continue to do that through the next year or so as we can move to feasibility and hopefully get this to even higher base THM grade as we get closer to final mine decisions. So there's a lot of information on those screens, but just summing up now, the scoping study parameters that we're looking at, most likely scenario will be focused on the ilmenite recovery to get the highest titanium oxide quality. Our base scenario is looking at 20 million tonnes per annum, which is a large operation. We anticipate multi-year mine life pits of high grades in excess of 6% with no strip, as I mentioned before. It'll be a relatively simple dozer pit operation with the hydraulic pumping of plant and the return of waste. We're looking to optimise rotary separation prior to magnetic separation circuits. And we're running the current metallurgical analysis in parallel to the scoping study, and we're comfortable that we're looking at 80+% recoveries and getting the grade of ilmenite concentrate up to approximately 50% of TiO2 content, which increases the value of that concentrate in the marketplace. The one thing I haven't had time to talk about is we have a large component of titanium magnetite. We're not counting on it from a base economics point of view, but with iron ore at current pricing, it could add substantial value to the project as well. And our operation would look at producing potentially 500,000 tonnes of iron ore per year. So in summary, because I'm running out of time, why would you invest in MRG Metals? Well, we've already identified 2 billion tonnes of JORC resource. As I've said, that's not the key element. We could increase that to 5 billion tonnes. It's a massive resource that we've got, but we're looking to high grade it. The scoping study will be completed within the next 2 months. So for investors, that's an opportunity to get in at a low valuation now before the scoping study is completed. We continue to look to upgrade and for higher grade resources to turbocharge the economics. This has the potential to be one of the largest heavy mineral sands discoveries in the last decade. As I've said, it's got multi-billion-dollar value in-ground resource. We've just now got to optimise the early mine life feed to drive the economics. The market appears to be in an uptick. It's been an unloved sector for a number of years, but we're finally starting to see improvement in resource prices. We've got a high calibre team in country. We're a low-cost operator, and we've got broader capabilities. And if the scoping warrants, MRG will be moving to feasibility later this year. So, good opportunity to get involved in a company that has a market cap of only $14 million.
Thank you, Andrew. Thank you very much.
Thanks, Bernard.
So, some questions. I think the first question won't come to you as a surprise. Obviously, in South Africa, we live very close to the bad news from Mozambique. So, the question is around from Steve Kefi. In light of the unrest suffered at Total, the project, has this affected your physical progress and possibly investors' interest? So, all the bad noise we hear about violence, war, terrorism in Mozambique, how's that impacting on your project and on your investors?
I think it hasn't impacted our project because we're basically 500-600 kilometres away, but it's definitely impacted sentiment, and we've tried to work on that, but it is sometimes a hard issue to resolve. But I think the bigger impact is with Total and the pipeline development that will ultimately have value to us in terms of energy supply in the southern part of Mozambique. But in terms of the project development, no, it's not having any impact on us at all at this point in time. But it is certainly something that investors ask me a lot and something we're acutely aware of. And certainly the Mozambique government's acutely aware of it as well. But it's not impacting us where we're operating, and we don't see any issues in the near term or longer term at this point in time.
In South Africa, probably the most contentious current social license to operate issues are around the Richards Bay area and mineral sands. Do you expect a similar societal sort of pressures on you when you get to the stage of mining?
We don't believe so. We've taken a lot of steps to make sure we're working with the government as we go along, because there have been some players in Mozambique that probably haven't necessarily done the best things for the industry, and we're trying to work on that. But look, they're the hard yards when you move from any project from exploration to development. But we're acutely aware of what we need to do, and we're actually looking forward to work on that, because we think there's a great opportunity for Mozambique in general to up the game in terms of its endowment of resources and what it could actually mean for the country to get some of these projects up and running.
And perhaps my final question then, Andrew, is going from $14 million market cap to billions of dollars of value, but also significant capital, is the real game for you and your shareholders to be at some stage bought out by a bigger player? I mean, that's a legitimate junior game plan. Are you aspiring to be gobbled up by somebody bigger at a premium?
Yes. Well, yes, and yes and no. Yes would be the answer, obviously, if we got the right opportunity with the right player, which would add value to shareholders. But we've actually taken the approach, we'll develop this ourselves as long as we can along the path to maximise value for our shareholders. So I suppose that's a convoluted way of saying we'd obviously love to be taken over at some point in time, but we think there's value to be created along the chain, and we're not at that value point. We'd hate to be taken over at this point in time. But obviously, as we develop the project and it gets realised value in the marketplace, then we would clearly talk to people. One of the biggest issues for heavy mineral sands projects is not just the capital, but lining the off-takers to the appropriate resource that you actually create. And that's the next big step. Once you get those pillars in place, then you can start talking to a lot of people. Yeah.
Andrew van der Zwan, thank you very much for joining us, and thank you for sharing about your company. Thank you.
Thank you, Bernard. Thank you.
So we are now joined online again. Can I just remind you, as the officially designated COVID official with all the legal responsibilities, wear your damn mask. Okay. Moving on swiftly now. So I don't have to because I've got social distancing, but you all have to. Okay, thank you for those complying. So can we move back onto our program? And we are joined now by somebody who, because of time pressures, I'll only introduce as Harry A. Adams, because if I try and pronounce that Greek surname, I will firstly screw it up, and secondly, stand here for the next 10 minutes attempting. So Harry, you're going to have to introduce us to your proper surname and your project, and you've got 10 minutes, and please leave us a little bit of time for questions, because gold, copper, in an area which we don't associate with mining, we would love to engage with you afterwards. So 10 minutes to share with us. Thank you very much.
Thank you. Anagnostaras, if you'd like to know the pronunciation. The opposite of agnostic. So I'm not only full of belief and knowledge, I'm the opposite of one who has no belief or knowledge. Okay, what you see on the screen is the deposit in Ethiopia. The deposit, the gold is in that hill and beneath it. And I've mostly focused this on Ethiopia, which is what I was asked to do, but I'm very happy to make a few points on Saudi Arabia. Half of our company's value is in Ethiopia and half it's in Saudi Arabia. Next slide, please. Next one again, please. So I'm keeping this at a very sort of, I'm keeping this at a very high level, obviously, given time available. I'm just trying to give a sort of, let's call it a business overview. We are a company that focused on the Arabian-Nubian Shield, the two sides of the Red Sea, about 15 years ago. We've made 2 discoveries in Saudi Arabia, and we've made an acquisition which we then fixed up, so to speak, in Ethiopia. We're quite convinced. I hail from Australia also, where the geology of where most of the minerals comes from in Australia is not too different to the geology of the Arabian-Nubian Shield. So we think we can visualize what's going to happen in Saudi and Ethiopia and 1 or 2 other neighboring countries. And we're there, if you like, as first mover to start the exploration, development, and so on. We're now into 3 advanced development projects. The one that's shovel ready is on the top row, Ethiopia, 140,000 ounce a year from the open pit, and then moving up in production via the underground. That's shovel ready, and we're closing financing over the next few months. Jibal Qutman in Saudi Arabia is in DFS stage, looking to start construction not that far behind. And Hawiyah is in PFS stage, looking to complete the PFS at the end of this year. And that's actually the biggest of these projects, but is third in the queue. Next slide, please. Now, as you just saw, those 3 projects together, as they stand, as an aggregation, will be producing a bit under 400,000 ounces of gold a year in aggregate, or gold equivalent, mainly gold, but some copper as well. And the Kefi beneficial interest is about half. We have partners in both countries, very, very strong partners in both countries. One's a very strong family office, and one's the government. Now, this slide here is just sort of trying to give you a little graphic image of the relative values. The red thing at the top left there is the market cap of the company today on the AIM market in England. about £30 million. And the boxes below it are the NPVs at the December 21 metal prices, just shown below, down the bottom there, the NPVs of the projects. So the Ethiopian project today has the biggest NPV, then the Hawiyah project, copper gold in Saudi, the next biggest, and the smallest project as it stands today has an NPV something similar to our market cap. Over on the right-hand side, the NPVs are presented in a slightly different way. And down the bottom there, what it's showing is that given today's number of shares on issue, we've tripled, if you like, NPV per share, over the last couple of years, given what we've done on the ground. Next slide, please. So group strategy, complete the financing and start the shovel-ready project in Ethiopia. We've been held up for some years in Ethiopia for the highly publicised, instability in the country that peaked last year, but has abated since, and the development show is back on the road in Ethiopia and for us. And at the same time, it has been shovel-ready for some time, and it's merely been a question of the country settling down so we could complete the financing, and that's what we're working on now. That's our number one objective, to keep de-risking the three projects. They're all past the point of being economically sound, but as I say, one's in Saudi, one's completing its DFS, and one's completing its PFS. Apart from building those three projects in a sequence, we have a very large pipeline of exploration assets in the Arabian-Nubian Shield, being the first mover, having an intellectual property database, which is developed by us over a 15-year period. So it's proprietary, and there's no shortcuts to these things. We've been on the ground for 15 years. And to be by mid-26 or around mid-26, a producer between three projects of approximately 400,000 ounces gold or gold equivalent. Next slide, please. Now, I was asked to home in on Ethiopia a bit. Ethiopia has been highly publicised the last year or two. It's a very important country in Africa, second largest population, base for the African Union. It was in the top 10 growth countries of the world for 15 years running until a couple of years ago when COVID and then its civil war in the north of the country struck. But essentially, you've got a very, very strong, powerful country, never been colonised, very independent-minded. There were some uprisings by minority ethnic groups that have been dealt with. A predominantly peaceful, very ambitious, well-educated population that really wants to get back to normal and get the development show on the road. And, democracy has been unlocked or unleashed, and it's moving now as a focus from just a political transformation to democracy onto now the economic, getting back onto that strong development path. How do we handle security? In a nutshell, our project is in what you'd call an amber zone when you compare projects on the continent in terms of security, but we manage it as a red zone. That's the gist of it. There's plenty of mining projects in red zones. This isn't, but we manage it as if it is. Next slide, please. The economic side of things, I'm sure you've all seen Ethiopian Airlines in your countries. When the Ethiopian nation gets behind a particular sector or venture, it goes. And Ethiopian Airlines is really quite a testament and to that determination and ambition. The largest hydro scheme in Africa is a testament to that ambition. There are industrial parks throughout the country. And I strongly believe that the mineral sector in Ethiopia will, in due course, be a testament to also to that ambition. And being first mover, we've got a lot of responsibility. We're honoured to have that position. We're always under pressure from the government to go faster. That's perfectly understandable. And I think now we can get going just because things have settled down and we can now move to closing the financing. Next slide, please. These are pictures from Ethiopia in 2018 when there was a peaceful handover from an autocratic prime minister, if I could use that expression, to a prime minister that represented the introduction of democracy. So it doesn't take much explanation to see the joy of the people. And last June, the biggest, most participated in democratic election took place. People queued from midnight to dawn. They were determined to vote, and it was an amazing thing to watch. I've been in the country much of the last 8 years. I'm in Addis Ababa as we speak, and I was there most of last year. I was here most of last year. But it's the unlocking of democracy and all the challenges it brings. No country is a stranger to the issues of all what that brings, but that's what's been behind, if you like, minority sort of uprisings trying to reclaim past powers, and the general country, if I can put it that way, basically not having a bar of it and pushing for democracy to be introduced. Next slide, please. Why Western Oromia or Western Ethiopia? It's been mining gold for millennia. The pharaohs used to wear gold from here, and a lot of it artisanal, but our particular project has no artisanal interest. Too much bulk mining, gold is too microscopic, but it's symptomatic, the general district, of an abundance of gold potential, and we're the first industrial scale 21st century mine. Thank you. Next slide. It's a JV with the government. We're the majority. They put in money. It's not just a giveaway JV interest. And it's continual consultation with the community. This is the community, or part of it, in Tulakapi, and this is if you like, a symptom or an example of how we have regular consultations. Next slide, please.
Harry, please just conclude so that we can take a question or two as well. Thank you.
Yeah, last slide. As I said, market cap about 30 million, NPVs a bit over 300 million. So it doesn't take a high intellect to work out the upside here as we de-risk and move forward. Thank you very much.
Harry, thank you very much. Quick question. You speak about a confirmed funding package. Now, normally that's quite a significant unlocker of value in junior companies. Are the terms of the funding public? Did the market not like it, or are you busy with the funding? I wasn't quite sure where you were going with that point. Just perhaps share your funding package with us.
Yeah, the funding package is all the term sheets have been signed. There are still some outstanding conditions for government consents, but essentially we've moved into detail. We've completed detailed docs on most of them, and subject to a couple of government consents, which we expect during the current month, we'll move into the remaining detailed docs. So we've got a fully formed up syndicate, signed term sheets, and we need a few months on the detailed docs.
And what gold price is sort of underpinning your assumptions for your cutoff in your valuation and your funding? What is the sort of type of gold price you use now?
Well, when we did the reserves, they were based on $1,200 gold. When we do the economic studies, if you like, it's based on $1,500 gold. And when we do the stress testing of the financials with all the debt and everything put into there, we stress it down to about $1,300 gold.
And then final question from Leon Lowe, who's a journalist who covers mining in Africa extensively. He wants to know, how has the civil war in the north of Ethiopia affected your operations, if at all? Just briefly.
The war itself didn't touch us. It was over 1,000 kilometres away, but obviously the country and the perceptions of the country and the financeability of the country was damaged internationally. So basically what we thought we would be doing last year, closing finance, was suspended and awaited the abatement of that civil war and awaited the rapprochement with the United States and awaited the lifting of the state of emergency. And all that having happened 6 months ago, we're now sort of game on again, if you like, having lifted the suspension of the closing of the finance.
Harry, we've run out of time, so Mr. Harry, not agnostic Adams, thank you for sharing your story with us. Thank you very much for joining us today, Harry. Thank you.
You're welcome. Thank you.
Are you rigged up or are you standing here? Okay, very briefly, because 10 minutes is a short time, but it's a small project you're going to talk about. So, Skalk Engelbrecht.
Good afternoon. Thank you, Bernard.
You see your timer, no? Can I just point it out to you? You see your timer.
You can accelerate if you want
Good.
to.
Okay.
Right, Waterberg PGM. This is a project in the Limpopo province on the northern limb. I'm Skalk Engelbrecht. I'm the financial executive and a director for Platinum Group Metals RSA. Forward statements, and there we go. So this project was discovered in 2011, 2012. 8 years, 9 years, 10 years later, and $80 million later, we've completed a feasibility study in 2019. Shows us a reserve of about just under 20 million ounces of PGMs, a mine life of 45 years plus, projected cost of about $640 per ounce, and 420,000 ounces per year in concentrate. Pretty much the 4 pillars that you want to cover for a tier 1 asset. Like I said, on the northern limb, newly discovered, so the northern limb basically disappears under the Waterberg sediments, a new discovery, 1-2 boreholes missed on our assumptions, and from there on, 450 boreholes later never missed that ore body again. Anglo Platinum Mogalakwena mine, of course, we all know, and the Platreef project on the same area, and we believe the northern limb, because of its bulk, thicker mining, will be the future of platinum and palladium mining in future. Platinum Group Metals, which is about 50% shareholder effectively of this Waterberg project, about $200 million market cap, and about 50% of our shareholding is institutional. So it's Hoskins Consolidated Investment, that's Johnny Copeland and his company in South Africa. Franklin Templeton, it's been a long supporter of Platinum Group Metals. They are based in California, and Copernic recently joined us for a 10% stake, and they are based in Florida. Here's the 19.5 million ounces over life of mine over 45 years. Palladium dominant, so 63% of palladium in our full split, good platinum, a little bit of rhodium, and quite a solid gold tenure there. Copper and nickel, looking about between 3,500 and 4,000 tons of nickel, plus another 3,500 tons of copper per annum in production. Just quickly on palladium, we are palladium dominant. There's a bit of a negative outlook on palladium going into the future, but we know what's going. One of the factors that we consider is that 38% of palladium comes from Russia. Our Japanese partners, which I'll come to now, sources over 45% of the palladium from Russia. Now, we've had talks with our Japanese partners, who's now reinvigorated, to source, let's call it a good source palladium. We've had discussions with the American government, we've had discussions with the UK government, and this seems to be a trend where Russian refiners are being sort of pushed out of the marketing trade. Our commodity price used in the Waterberg definitive feasibility study was just under $1,500 per ounce. Recently, it was sitting at $2,000 per ounce. And although palladium might be a number that we could be worried about, we see, is there lots of echo? Okay. We see although the volatility is there, we think our basket will make up for a number of changes in metal prices. Just on ownership of the Waterberg project, Platinum Group Metals, together with our Black Empowerment partner, just over 50%. Impala has been a partner for some time now at a 15% level, and Jokmek and Hanwha, the two Japanese partners, sitting on just over 20%. We have done a huge amount of work around ESG aspects, community consultation. Our environmental authorization was granted in 2021. Our social and labor plan was approved long before our mining right was granted. And because of the new bulk mining and slightly different mining method from what we know in the platinum industry, there's huge opportunities for training, employment at decent remuneration skills, and infrastructure development in the area. We use a crowd called Digby Limited in the UK to score our ESG status where we're right now. We've got quite a wide scoring, generally quite good, and the numbers, the lower scoring items are items that's really easy to fix. So let's talk about an ore body. It's massive. We've now drilled off, like I said, and into our definitive feasibility study, 19.5 million ounces. It consists of two layers. The one is the F zone, which is the bulk of the mining. It's between 2.5 meters and 98 meters in width, and that's reserve width, mining width. And then just above that is the T zone, 2.5 meters to 23 meters in mining width. Ore body is about 8.8 kilometers long in the case of the F zone, and 4.8 kilometers in the T zone. And the top picture just shows you the sort of density of drilling over that ore body. Just an aerial view. Scarcely populated area, which helps a lot. And then the infrastructure, as you can see, is just decline access, straightforward in terms of simplicity of development of a mining project. The mining method is long hole open stoping with paste backfill. Like I said, bulk mining, huge safety improvements by using totally mechanized setup, higher productivity, and quite geotechnically simple if you use the backfill. In terms of our cost curve, where we sit, we reckon that we would probably not be too far off the Mogalakwena mining operations and similar to other North Limb and Zimbabwean operations, which puts us in a lower quartile. Just quickly again, on a feasibility study done by Stantec, and yes, we had to use DRA. There's the ounces per annum, the operating cost of $640 per ounce, which leaves us quite a significant margin, 20.7% IRR, 45 years life, and estimated peak funding of about between $600 and $650 million. These are 2019 DFS numbers. It's getting a little bit stale, seeing what we've seen in terms of inflation over the last couple of months and years. We will be updating that DFS and make those results available around February, March next year. Of that estimated peak funding, we looked seriously and are now considering a metal stream for about $300 million, and that stream is for our gold only. So 6% of our revenue in the future could be tied up in a gold stream, and we're moving into definitive agreements for that. Just quickly on what bulk mining does for you. So those yellow dots are, and on the X scale is the ounces per person. Those yellow dots are all our eastern and mostly of our western limb PGM operators. It's difficult for those guys to get more than 5 grams a ton per employee per month. Waterberg, as a mechanized mining, moves way over the 50 ounces per employee. And that just explains the cost efficiency benefits that you get out of productivity. Mogalakwena, of course, sorts of moves off the scale. Where are we now in terms of Beneficiation, yeah, the normal way for mines or junior operators in the PGM industry is to mine, concentrate, and then sell off to a third-party smelter. We do not have an offtake right now. We are on active discussions, and it is moving forward. But what we're considering with 420,000 ounces a year is actually to build our own smelter. We reckon we do have the critical mass, and we think there could be other third parties that would also be interested in bringing new PGM concentrate into a smelter. So those studies are progressing. We're drafting a scope for a DFS right now, and once again, that will also be available around about February, March next year. It's a good consideration. It's not to say that we are definitely going to do that, but the economics of that actually makes sense. How would this project unfold? Yes, DFS completed in September 2019 and approved by our partners in December 2019. Mining right was granted early 2021, and we are now putting a funding package together. For those that know, Platinum Group Metals did build a mine. We started that mine without funding, and it was also always pressure to keep things going. We're not doing that again. Construction is about 5 years. A year into construction, you start your underground development. 4 years down the line from construction start, production build-up starts. And that's about a 2.5 to 3 years where we get to full production after a total of about 6 years. Just on the sideline, Platinum Group Metals is also involved in a joint venture with Anglo Platinum. It's called Lion Batteries. We've got a whole list of patents, and these patents deal with introducing PGMs into the battery space. Our research at this stage, done through the Florida International University, shows that PGMs have quite a big effect on all current lithium-ion battery technologies. We are now focusing our research there into the lithium air and lithium sulfur space. These are batteries where actual chemical reaction happen, and PGMs, just out of their nature and where they sit on the periodic table, means they can do the catalyst job there and make these batteries function better. It's early days, very early days, and years away from commercial potential, but you know, we might just be able to take a number of other metals out of batteries. So vanadium might not be needed. Right, investment highlights. Tier 1 mining company. We are a debt-free company right now. We've got Lion Battery, and we believe low-cost bulk mining in the future will be the way to go.
Thank you, Skulk. A project question and a company question, I think. So the project question is, you spoke about stale sort of numbers which you need to adjust for inflation,
Yep.
construction costs. You are very palladium dependent, your palladium view. So just bring those two things. If you had to redo numbers now, what would you do in terms of the capital cost?
Yep.
What would you do in terms of the palladium price?
Yep. So the palladium price, we understand we cannot put a target of 2,000 in there, but we also have to take cognizance of what the other metals will do. So we see forecasts of palladium going back to 1,000. We see forecasts of platinum going to 1,600 again. I don't think those extremes will happen. I think the truth is somewhere in between, and because our metal basket is healthy, we still believe a huge margin will exist. Our costs are net of nickel and copper credits, and those metals, in the positive forecast we see for those, I can see that we can bring our costs down as well if the revenue line comes down. So I think the margins will remain. Your other question was on?
No,
The cost.
Yeah.
Yeah, we understand. Steel, copper, the metals that you require to build a mine, labor, all of that has gone up significantly. A lot of our pricing is in dollars. We've seen dollar escalation as well. So that is something that we are, I would say, nervous about, but I don't think we have opportunity to do some optimization in this feasibility study. So, you know, there's shallow areas that we haven't drilled into measured. What I didn't measure on that chart that shows the resources. Our first 3 years of production is inside measured areas, and we might be able to bring some more shallow areas into measured in the next couple of months, which means capital development doesn't have to happen so quickly, and there's opportunities to bring the peak funding down again.
The next question doesn't state who it comes from, and it's only in South Africa where we ask you as a junior miner, you still have to build your mine, you may have to build your plant. We already want to know about beneficiation. So will beneficiation of PGMs be part of your strategy in the next 212 years, obviously? Yeah.
I don't think we want to go beyond the BMR stage. So the preliminary studies we've done on smelters and BMRs, that's a really good business.
Just tell the audience what BMR stands for.
That's a base metal refinery. So that's basically where you get your copper and nickel out of your concentrate. But you do not go into the precious metal refinery. That's a downstream area that gets very complicated, very risky, lots of working capital, lots of metals in process, and very specialized. I think juniors shouldn't be in that space.
Unless you have got a special relationship with Eskom, amongst other things. Yes. Ladies, gentlemen, thank you, Schalk. Thank you. Join me in thanking you. And now for something completely different. We are now going to talk about Steenkamp-Král. We are joined by Trevor Blens, the chairman of Steenkamp-Král Holdings Limited. Trevor, 10 minutes to tell us about an asset we all, as old people, have all heard about it a few times. So come and tell us more about it. Thank you.
Thank you very much, Bernard, for this opportunity to tell you about this Steenkamp-Král. As you say, it's been around for a long, long time, so I'm going to explain a little bit about the history. The history. After the Second World War, the British government bought thorium and tried to make a nuclear weapon out of thorium. Steenkamp-Král is the highest grade thorium mine in the world, and it was the obvious place to take the thorium from. The British government tried for 10 years to make a nuclear weapon out of thorium, and they failed.
Thank God, huh?
Thank God, yes. And they stopped buying thorium, and Anglo-American closed the mine in 1963. But the track record of 10 years of production is very important. During that time, you can see the numbers on the screen there. They removed 126,000 tons of ore from the mine. They produced 59,000 tons of monazite concentrate. Monazite is the ore at Steenkamp-Král that contains both thorium and rare earths. The ratio between the rare earths and the thorium is about 7 to 1. That is 7 times more rare earths than thorium. I'm glad that's not the other way around. And the monazite concentrate they produced was 26,000 tons, and the rare earth grade in this monazite, and please listen to this, was 20%, over 20%. This track record of grade and production is exceptional. There's nothing like it in the world. And as I mentioned, the British government stopped trying to make a nuclear weapon with thorium 10 years later, stopped buying thorium, and Anglo-American closed the mine. This is what Anglo-American left behind and that we have now. The shaded areas are the areas where Anglo-American mined the deposit. And from those shaded areas, they produced those figures that I showed you a moment ago. The white areas are the unmined areas. These are developed ore blocks that we have accessible for us now to mine. And this development, which includes about 12 kilometers of tunnels in that mining area, is what we have as an asset today. We've estimated that it would cost about 500 million rand to do that development today. Now, Anglo-American closed the mine in 1963. And now you're going to ask, well, what happened after 1963? Well, I'm going to be very brief on this slide. I've got 10 slides with about a minute each. This one will take less than a minute. For 50 years after 1963, nothing happened. The reason for that is that there was no market for thorium, and there was very little market for rare earths. Rare earth prices were very low. I mean, rare earths, so it's a fancy name for industrial minerals. The rare earth prices were very low, and there was no interest in the mine at all. Rare earth prices went up in 2010. The reason for that is there was a dispute between China and Japan over some islands in the South China Sea. And rare earth prices went up. And a Canadian company called Great Western Minerals Group bought Steenkamp in 2010. And over the next 5 years invested 500 million rand approximately in Steenkamp. They spent nearly 100 million drilling 28,000 meters of core. And the cores are all in a core shed at the mine, beautifully labeled. They spent, they trebled the size of the resource and acquired an NI 43-101 mineral resource estimate and also a mineral reserve estimate. And we have at Steenkamp, as you can see there, based on this NI 43-101 resource estimate, 605,000 tons of ore at an average rate of 14%, which again, it's lower than the 20% that we saw earlier. That was the Anglo-Americans production statistics. But this 14% is still, it's the highest grade rare earth resource in the world by far. It means we have 86,900 tons of ore, and so a very good resource has been established at Steenkamp. In 2015, rare earth prices went down, and Great Western went bankrupt, and Thorium Foundation, that was involved in the development of thorium as a nuclear fuel, acquired Steenkamp to secure the thorium asset. Now I'm going to describe to you the bonanza that we have at Steenkamp. 86,900 tons of rare earths. Rare earth prices have gone up a lot, the average basket price, mainly because of the electric vehicle industry and the wind turbine industry. The demand for 4 rare earths in particular, neodymium, as you can see there, praseodymium, dysprosium, and terbium, are used to make the very strong magnets that go into the electric motors and electric vehicles, and they go into the wind turbines as well. The demand is doubling every couple of years, and the prices have doubled. And the basket price has now moved up to about $40 a kilo, and that means that we have a resource of very great value. With the high total grade of 14%, it means that we have a neodymium grade on its own of about nearly 3%. So our neodymium grade on its own is higher than the total grades of most other rare earth deposits. And rare earths are not all rare. Cerium and lanthanum, which constitute 60% of the total volume of rare earths, are very abundant and very cheap. They're just over $1 a kilo, so they are practically of no value at all. I do want to emphasize that to achieve that market value of $3.5 billion or 56 billion rand, we have an enormous amount of work to do to achieve that, and we certainly don't underestimate that. Now, about R1 billion has been invested already at Steenkamp, and that is why the additional capital requirement is quite small. To bring the mine back into production, I showed you the diagram of the mine. So much work has been done there already that it will only cost us about $80 million, rand, 80 million rand, $5 million to bring the mine back into production. Then we have to build a monazite concentration plant. That's about 80 million rand. Then we want to build a monazite cracking plant. This is very important because we have to separate the thorium from the rare earths. We can't use the rare earths without removing the radioactive elements. So that cracking plant will cost about 300 million. And then beyond that, we want to separate the individual rare earths so that we can extract the neodymium, the dysprosium, the praseodymium and the terbium, so we can sell that to magnet makers and achieve those high valuations, those high prices. So with a total investment of about 1 billion rand, not dollars, rand, we'll be able to sell about, 60 billion rands worth of rare earths over the life of the mine of 25 years. My lifetime won't be that long, so fortunately the mine life will be much longer than my life. Now, permits. I want to spend about 2 minutes on this slide, if I may, Mr. Chairman. We have all the permits that we require to commence construction and production. But I want to tell you the mining right, the DMRE granted us our mining right in 2010. We then spent about 30 million rand on water supplies. We need water for our processes at Steenkampskraal. We need a good supply of water. And the mine is in Namakwa land, which is a very dry area. So we spend a lot of money identifying underground aquifers and developing water resources. We then applied for a water use license in 2012. And I wish that people were here from the DMRE and the Water Department of Water Affairs. It took us 7 years to get our water use license. So we were in the situation where the DMRE had given us a mining right and wanted us to mine. We applied for a water use license. It took 7 years to get. So for 7 years, we had the Department of Mineral Affairs wanting us to mine and the Department of Water Affairs obstructing our progress. I appeal to the South African government. I implore you, this is not just a failure to approve a legitimate mining activity, it's obstructionism. It prevented us from proceeding with the project for 7 years. I implored of the South African government to get its act together and synchronize the application and approval procedures so that these delays do not occur. And we were asking yesterday, why does South Africa not attract more investment in prospecting and mining? This is one very big reason why we have been, my time's up, why we've been, I'd like to just mention one more thing if I may. On the mining right as well, we have the mining right to mine for rare earths and other minerals on portion 1 of the farm Steenkampskraal. A few months ago, another company applied for a prospecting right for rare earths and on the same portion 1 of the mine Steenkampskraal. The DMRE correctly refused to approve that permit for a prospecting right over the same land where we hold a mining right. However, the company that applied for that prospecting right appealed to the DMRE against their decision to refuse that prospecting application. We've now been waiting for 60 days, which is the statutory period that the DMRE has to review these appeals, and we still do not have the reply from the DMRE. We want to raise money for our project. There is an application for a prospecting right over with the land where we have a mining right, which contests the legitimacy of our mining right. This cannot happen. If there is an opportunity for claim jumpers to come in and apply for prospecting rights where you've already issued a mining right, then it questions the validity of the mining right. So again, I implore the government to make it clear that these mining rights are secure so that we can proceed with our investment. Look, I'm way out of time, but I apologize. I've run out of time.
So perhaps a question from somebody who chooses to remain anonymous, and I think the question makes it obvious why. Should we buy into Rainbow or Steenkampskraal? I mean, and you are completely objective, so just give us your objective answer. Shut up, Mr. Rainbow. So I'm talking to Steenkampskraal. That's a question from the audience.
Both.
That's such a cop-out. Listen to the gentleman. Buzz. Excellent. So tell me, what happens next? So you've got issues junior miners have got issues. At some point in time, you need to take the next step. What is your next step?
We do need to clarify this mining permit application.
In the next few weeks,
That
hopefully.
should happen in the next week
Soon,
or
soon.
two. The statutory period for the DMRE to announce its decision, it's a period.
Do you mind speaking a bit closer to the... sorry, I
That's-
pulled you away. Sorry, Trevor.
It's already expired.
Yeah.
And so now we will raise money and build the mine.
My advice from past experiences is the channel between the Minerals Council and the department functions reasonably well. So if there's a clear case of they had 60 days, they did not come back, it may be worth contacting the Minerals Council, and I could even assist you with that. We have resolved a few such administrative problems in the past. Obviously, if there's attempts to corrupt in the middle, that takes longer. But if it is just honest inefficiency, is there such a thing? Honest inefficiency. If it's just inefficiency, then that channel may assist. So,
Thank you very much for the offer. I appreciate it.
ladies, gentlemen, Steenkampskraal, you better learn how to pronounce it. You better learn how to be aware of it. You don't have to pronounce those minerals. I mean, I don't know. I mean, can you imagine? We would think our minister announcing new discoveries of metals and minerals that don't exist if he were to tell us about it. Trevor, thank you so much. 10 minutes is never enough to share a dream and a passion, but thank you for doing it anyway.
We do have this presentation on our website if anybody would like to.
Thank you
see
very
the
much.
rest of it.
Thank you. Thank you very much. I personally, obviously, as I'm getting older, I like it when older people like Trevor and Peter speak, because you know what, we don't have so much time left. We must do this in our lifetime, so let's get cracking. I mean, when you're young, you think you can leave it for later. Meneer Major, are you awake? Have you got some thoughts? You stand between us and lunch, so if you want to be blunt and brief. Huh?
I know, you always cut me short.
Yeah. That's what I do. That's my call. That's my.
You say, I don't make people laugh. That's your job. This is Bernard's comedy hour, but this is Major's facts and fiction.
Ah, okay. Facts and fiction. There we go.
Do I have to flip through some of the old slides? Let's see.
You could also look there, because then you speak into the microphone. Huh?
Okay, where do I point the
Green.
ray gun?
It's green.
Yeah? Have you got to override? Good, okay. We went through those. Hey, but these still apply, so don't forget these, everybody. That's what we're going to benchmark the next companies with. Yeah, MRG. I don't know. Usually the graph tells you a lot, if not almost everything. What does this tell us? This tells me what I know about heavy mineral sands, because I donated a few years of my life and quite a bit of my pension to heavy mineral sands. And it's a lovely metal, but this is a high-tech metal to refine. It's easy to dig sand out of the ground, but to refine this makes platinum and rare earths look like child's play. And I think that's, if we go back to those boxes, the metal, it's a difficult metal. The country, Mozambique, is not an easy country. I only know 2 parties that ever made money in heavy mineral sands. One is called Rio Tinto, and they spent billions in decades. The other is somebody named Rob Still, who always seems to get the timing right. I don't know why God favors that one man so much, but he got into quarter sands in Mozambique at the right time. We gave him a lot of money. He did his usual bit very well. And boy, he got out at the perfect time. He had a bidding war going on. It was 2003, 2004, when the world was coming out of a 30-year, 20-year downturn in metal prices. So he had all the planets lined up. All the other heavy mineral sand producers, I'm not sure they made money, and I know a lot that lost. So my question is, why is this one going to be different? Yes, the ilmenite price has doubled, and that makes a big difference to any mine when your commodity price doubles. But the problem is, that's about all this deposit really has, is ilmenite. And ilmenite is the most difficult of all the heavy mineral sands to refine. It's expensive, tricky. Ask Anglo American, Namakwa Sands, they're always frying furnaces. Richards Bay doesn't fry furnaces so often. They're getting good at processing it. Namakwa Sands is a rutile and mostly a zircon mine. That's where it makes its money. It probably barely covers costs on the ilmenite side. But this mine on the East Coast, there's very little zircon, very little rutile. So everything is dependent on ilmenite. So this is going to be an expensive process. The ore body's in a difficult place. There's very little infrastructure. You need rail. It's a few hundred kilometers from the coast, I think. You need port. I know in the presentation they say, oh, that's going to be built and it's going to cost billions. But do you trust Mozambique to spend billions to build all this infrastructure so the mine can get going?
So why don't you tell us what you really think? I know it is.
Also, heavy mineral sands are very cyclical. I can give you a graph that goes back 50 years. It's a perfect sine wave. I know most things revert to the mean. This is definitely one of them. And it's very hard to find someone to refine this. It's very specialized technology, and Anglos protects it, and Rio Tinto and the Canadians protect it. Let's go on to Kefi gold and copper. There's too many choices out there in the good, the bad, the ugly. At best, the heavy mineral sands are ugly, and at worst, they're just plain bad. Kefi, copper, and gold. I believe Ethiopia has more gold at a higher grade than any country in Africa. And it's taken a long time to convince me of that. And I've got 2 friends from South Africa and 2 friends from the UK that were all immigrating there a couple of years ago. They liked it so much. Bruce Tinney was taking his wife and 4 daughters there just as the revolution came out. And he'd been there off and on for 10 years. So they're a pretty benevolent people, but they just have revolutions. When they're not having a revolution, I think it's much safer than anywhere in South Africa walking down the street, though. Great deposits, they're shallow, they're high grade, it's fairly easy gold to recover, it's not a complex ore. But legislation, yeah, it looks good, easy to get your permits, but you're always worried about the revolution. You are worried about another government. I would choose this, I think, literally I'd choose it over Ghana and the most of Northern Africa. But Kefi, let's see a couple of the notes I got here just to remind myself. It looks like a minority ownership in 2 of their 3 projects. There's a lot of CAPEX going to come. You're going to have to pay the CAPEX if you're going to be a shareholder here. Huh? That's the joys of getting in early, is you get to help fund everything. And when I was working for Mark Shuttleworth, we had a nickname for most of the little companies that came to us. We called them lifestyle companies. I'm not saying this is one, but the ones that came to see us, they wanted you to help them stay in the lifestyle they'd grown accustomed to. But the problem was their lifestyle was eons above me, and it wasn't one that Mark liked either. So everybody's got a dream. Everybody needs help funding the dream. You just have to decide, do you want to be that person? So yes, the risks. Is it a dream? Is it a lifestyle? It's a good place to look for gold ore. The grades are good, but I just think there's more choices out there for all of us. Okay, so yeah, copper and gold, nothing wrong with the minerals. Platinum group minerals. I liked this project from the start because I didn't believe it. It just sounded too good. A bit like Trevor's rare earth project. When you see the numbers, you can't believe it. But the longer you get used to these projects, the more you learn the numbers are real. And I think the only question I've got, Skulk, is Impala Platinum. You know, when I see how much money they put over in Canada, and they're spending money here, and I think, I can't even remember the reasons they gave for not following their rights in this, but maybe you can elaborate again. I love this project. Probably the only negative I've got out of this project is the country it's in, followed by the legislation, the DMR.
And the opposition party, I mean, just throw him into it, yeah.
I'll tell you, if James Lorimer wins the election, I'll put my pension in this company. Of course, it'd probably be our first assassination. Okay, I'm not sure if these graphs are relevant. I don't know. This is what I got off last night. It was a bit late. My computer was dying, so I was working fast. I think your graph is more accurate. Probably what's important here as well, though, this is the 3 PGM basket price of all the South African underground mines put together. And it's $1 a ton. And you can see why they went from cash negative to cash flush, high debt, like Neil Fronem at Sibanye, what, 32 billion debt 2 years ago at the start of COVID. I think he's sitting on 16, 20 billion profit now. So, yeah, the ore price is currently about $300 a ton for our average underground producer. And it can fall down to $200 a ton, and it's still fabulously higher than they've ever seen in their history. Where is this price going to stop though? Because gravity is pretty powerful. So I think I said this earlier. If you're investing in a company that has a price sitting up this high, even if that company is cheap, it's going to get cheaper if the price keeps falling down. And it's going to be more expensive to raise capital. Okay, the CAPEX should be lower as this price comes down. But that would be my worry about buying any PGM company right now. I want to see this price stabilize, and I'll be surprised if it stabilizes this high. Gold kind of seems more content to stay up this high level. All right, you are primarily palladium dependent, but yes, if the mean has any bearing here, you're a long ways from home. And maybe you're going to be a permanent refugee away from home. You know, $2,000 is great. You know, this is a knockout project at $1,500. And I saw you had very conservative estimates, I thought. You don't really have any rhodium in your mix, so it doesn't matter if rhodium falls a bunch more. And platinum sitting at $950, you know, I think platinum's dirt cheap. I think platinum's going to go up, which will help you. So my main question on the metal price is, where is palladium going to be happy? And with the trouble in Russia, palladium's probably going to stay up here for a while. Okay, if we come to Steenkampskraal, you're right, Bernard. This is the longest project I've heard about in South Africa. I heard about this when I was at Allen Gray in '89, '90. I think you were even listed for a little bit. Where's Trevor? Weren't you listed for a short period of time? Rareco. Yeah. So nobody wants to see this project go more than me. I want to see it go before I die. And I'm sure you want to see it go before you die. I think the numbers are true. Yeah, a long time ago, I thought they were too good to be true. They're there. I think the address is the main problem here, in a place, in a planet called South Africa. And with all the, and you don't have a Zama problem. I don't really think you got an Eskom problem here. You do have a water problem, but it's kind of solved it. Yeah, we keep wondering, why aren't the Chinese here? Is it too small for them? Why aren't the Americans here? Well, they don't like our voting record on the United Nations, for one thing. I know when Trump got to be president, they cut off our trade status. We sent a delegation over there, and our trade minister was arguing for most favored nation status, and Trump's attaché said, do you see this voting list? Do you see those two countries in the middle, Russia and China? They're not our friends, and they vote for us more than you guys. You're at the bottom. So we won't get Americans here who really want rare earths. I don't know who we're going to get. We may have to find a local funder. If we check some of the prices, New Age Minerals, well, boy, you've got them on the rare earth side. Yeah, from 50,000 to 150,000. And I think that's the majority of your income too, isn't it here? Yeah, so you've got the right minerals and they're doing the right thing. I don't think they're going to stay this high, but they could fall 50%. You could easily justify the cost of it. And the whole world wants to reduce China's percentage here. Well, what a nice opportunity to do it. Would I invest in it? I'm not sure if I'll live long enough to see a return. I think it's a great project. I want to see somebody big come in and then I'd probably list alongside, but then he'd have it at such a premium. So it's a tough call, Trevor. If I hadn't seen it for 30 years, I'd give you some money today, but we worry this could be another 30 years.
Ladies, gentlemen, the facts and fictions according to Peter Major. Thank you very much, Peter. Thank you. And he still has friends. So, I mean, that's why I up my game. I just get more sarcastic, because if Peter gets away with what he says, then I should also. So I think we've reached lunchtime. So let's be back in a bit. Please, indoors, we have to observe the COVID rules. Outside, obviously, it's slightly more relaxed, so pick the space where you're comfortable. And let's go and enjoy lunch, and we'll be back in for panel conversations and more company presentations after lunch. Thank you very much, everybody.